Hi there, this is Wes Moss with Wes Moss Money Matters, and today I wanted to talk about a huge disparity when it comes to the stock market in 2020. What we've seen is a small amount of very concentrated but large companies rule the day. The analogy I've been using is that you've got, out of the S&P 500, you've got 5 people driving the bus, you have 495 people really just along for the ride. And I wanted just to draw out a quick visual to show you what this looks like. There's a big difference between growth, and everything tech this year, and more traditional dividend-oriented companies that have recovered since the March 2020 inflection point, but also lagged way behind some of their tech brethren. So I wanted just to draw this out and show you what I think, A, to understand what's happening, and B, maybe what the opportunity is as we move forward into next year. If indeed we get this economic recovery, we open back up, and we're able to put the majority of the COVID-19 crisis and pandemic behind us and have a thriving economy again. We could see stocks that have lagged way behind this year maybe play a game of catch up. Let me draw this out just very briefly here. I'm going to draw a quick chart. On one side of this chart, of course, is going to be the total percentage return. And then this is the year that has been 2020, which we're also maybe trying to forget or looking forward to getting through. And let me just draw just the pattern in general, what we've seen with growth stocks versus just dividend-paying companies. So we started out the year really well, and then we had the COVID crash. Then we've had quite a recovery over the past, call it, several months. Now, this would be the growth-oriented companies, particularly tech, not so much dividend payers. Now let's take a look at more traditional dividend-paying companies and see how they've fared. Well, they've kind of followed along, similar drop, and they've recovered as well, but they haven't recovered quite as much as growth, and we'll call these the dividend-paying companies. As you can see, there's a big disparity or a gap between these two. Now, of course, growth stocks could come down to meet dividend companies, or dividend companies could rise up to meet their growth cousins, if you will, which could potentially be an opportunity. That's the market that we've seen this year. That's the pattern that we've seen. So as we see this economy emerge from the pandemic and we get back to a more normal economy in the year 2021 and beyond, then I think we could start seeing these more traditional dividend-paying companies start to play this game of catch-up into the next several years. And that's what I'm watching for. Any given period of time, there's an area of the market that's really working really well, and that's been technology for the year 2020, because it's been a true tailwind to support technology-oriented companies. Not that there aren't a lot of very healthy companies within the technology sector, but the question is, what about the other 450 or 495 companies that have been somewhat left behind? That's my thought headed into 2021 and beyond. Those are the companies that I'm looking to play a game, really a game of catch up, and eventually get their day in the sun. So I'm a big believer in income investing and dividend-oriented investing. I believe that over time, and we've seen this over and over again over the last almost 50 years, that dividend growers and initiators, these are companies that pay steady dividends each year and are able to ratchet up those dividends, over time, they actually outpace their growth brethren. These are companies that don't necessarily pay dividends, but maybe have higher rates of growth. Intuitively, it might sound like, don't growth companies do the best over time? Well, actually, over a really long period of time, call it 40 plus years, we've actually seen dividend growers and initiators outpace purely growth and non-dividend paying companies. And that's a trend that it may not work in any given year, but has proven out to work very well over time. So I want to, as a dividend investor, I'm a big believer in, as this economy reopens into 2021 and beyond that, I could see dividend paying stocks really make a comeback and really see a nice recovery. Again, that's just my opinion. That's my 2 cents on this. If you ask 10 investment folks what their opinion is, you might get 12 answers on that. And that's just the reality of investing. But I'm a big believer that as an investor, you have to have a philosophy that you really believe in and stick to that over time, as long as the fundamentals stay intact. And that's exactly why I wanted to do this quick video and visual to think about 2021 and beyond when it comes to more traditional dividend-paying companies. If you have any questions or you'd like to learn more about becoming an income investor, our team is here to help. You can send us questions right here in the comments or go to wesmoss.com. Those emails will come straight to me and the Money Matters team, and we're happy to help. Thank you so much.